Good afternoon. I'm Brent Wilsey with Ms. Chase Wilsey. We're from Wilsey Asset Management, and welcome to today's Smart Investing Daily Briefing. Today we're talking about, do you really need life insurance? A lot of people, they're sold life insurance and they have it. I'm not sure why they have it sometimes, but let's talk about who really should have life insurance. Young working families with home and actually children, because what you're worried about is you're both working. If one of the spouses passes away, you don't want to have to move out the house and how you're going to live now because you lost that income. So it replaces the income and kind of creates an immediate estate for you. Speaking of that, there are a few high net worth individuals that life insurance may make sense for you, but a very, very small amount. Most people don't need life insurance. The best types, and throughout the year we'll try to talk about other types out there for you so you understand if you have the good one or the bad one. But the best types include term insurance and some low-cost whole life insurance policies.
Exactly, and as you're kind of talking about replacing the income, as always with a financial matter, it's always important to take a look at the numbers. Always crank out the numbers if you're making a financial decision. Once again, the reason that kind of insurance scares me a lot of times, is there's a lot of great salesmen because it is an emotional ploy. And a lot of these guys make big commissions. Kind of brace yourselves here. Sometimes 60, 70, maybe even 80%.
Exactly.
So kind of scary. And I will say there are some good insurance salesmen out there, but other ones are out there for the big commission check. They have commission breath, is what some people like to say. Also important here, life insurance is not an investment. It is far better to go out and buy small pieces of large companies or stocks as an investment.
And I always tell people, don't be afraid to ask that salesman, what is your commission? If they don't tell you what it is, walk away from it, because they should tell you and tell you what it is, because hey, if it's not anything to be afraid of, why wouldn't they tell you? So be sure to ask. All right, let's talk about insurance company Metlife Incorporated. The current price on 39, the high 56.57, the low 38.87. We see it has fallen down to about that low right now. Let's look at the numbers here. Their sales are down 6.9%. Earnings falling by 24.1%. This could be because of the DOL rule that has come out. Department of Labor was said, no, insurance people, you have to disclose more about what you're making and the numbers behind it. You can't just sell it without disclosing more. So this is hurting some companies. But right now the yield on MetLife is 4.08% with a payout of 32%.
Now looking at the balance sheet, as you can see, there's no current ratio. Debt to equity is 82.3%, which is far above the industry average of 31.9%. And while you may be saying, well, that doesn't look good, it is a financial company, so the balance sheet is a little trickier than your traditional companies. It's very important as an investor to understand those assets and liabilities. Going out to December 2017, estimated earnings per share on a GAAP basis are $5.65. That gives you a target sell price of $93.23. And I will tell you, they did report earnings and sales today with a huge miss. The stock was down about 9%, so you could see this revised down.
And this could be time to look at buying this company, maybe not jump into it now, but you want to buy companies when they're getting beaten up for certain reasons to see if they can weather the storm. I don't see this company going away, but understand the business before you jump into it. Well, I hope you enjoyed this edition of the Smart Investing Daily Briefing. If you'd like the free report on the 5 big mistakes that investors make,
give us a call at the office. Our phone number is 858-546-4306, or go to our website, smartinvesting2000.com.